All right, folks, let's go ahead and let's start. Okay. All right. Well, let's just go ahead and start. All right. Let me just briefly go over what we have covered earlier. This is part of the series of indicators that we are covering. Let me start off first by saying that all indicators are lagging. Well, I generally don't use any indicators except for one to look for one particular setup. But since a lot of traders tend to use indicators, I thought it would be worthwhile to explain the best use of an indicator and maybe use the indicators with a little bit of twist to give them a better effect, if you could call it, or to use them a little more properly. Right? Now, let me first just go ahead and say that this is my website, London School of Financial Trading. We conduct courses online as well as workshops, webinars on forex trading, on technical analysis, basically forex trading. Of course, this can work for any market, any financial instrument which exhibits volatility. You can apply these rules for any of them. Right, so I will be in London in November to attend the World Money Show, and we will also be having one workshop. In case anybody is interested for the workshop, please let me know. I'll give you my email. I'll be more than happy to see you. In a sense, this is what we cover. Now, based on my experience of trading for the past 12 years, like everybody else, I started off trading with indicators, and it's not anybody's fault. Today, if you look at any course, they talk about indicators first. You purchase a book, you purchase a course, everybody talks about indicators. Yes, indicators can be good for your trading, but unfortunately, most traders, especially the new traders, think that just using indicators becomes the trading technique, becomes a trade plan. It is not. I have seen from my experience from the traders that I have coached over the number of years, or the traders who have been with me over the number of years, from my experience that most traders tend to lose because they are really not aware of the correct factors of trading or the procedures of trading. Let's put it that way, the procedures of trading. Besides technical analysis, your money management and the mind factors, what I call it, your discipline and your patience, is a very, very important factor. Now, I follow the concept of 3 M's. The 3 M's being money, mind, and method in that specific order. Now, if we distribute the trading procedure or a trade plan, excuse me, on a scale of 1:10, money management would take up about 5 parts. The mind factor takes up about 3 parts. And method, which is the technical analysis, what we are talking about today, takes up only 2 parts. Now, you see, the technical analysis is the least important part of your trading process. Unfortunately, since we base our entire trades on charts, at least as technical analysts, we tend to give more weightage to technical analysis, which is a fact. But until and unless you do not apply the other M's of money management and mind factor, it's not going to be easy to grow your account. And within the method, also most traders tend to use indicators which are lagging. So I would say a new trader tends to use only 1 part out of 10 of the entire trading procedure. So it's not surprising that he or she tends to lose money. Like I said, initially I started off like this. Even I lost a lot of money initially. But it was based on experience. And today I want to put forward this experience to give the traders the correct approach, a proper path to it. There's a reason why we started off on the series of indicators. It's important to understand that all indicators are lagging. Now, just briefly, for those of you who have not attended the previous sessions, they have been recorded, some of them. You can find them. We went over the indicators like the Bollinger Bands, what is the best way to use Bollinger Bands, the RSI, what is the best way to use RSI, not as a simple oversold, overbought level or indicator, the slow stochastics. Now, this MACD, this is something which we are repeating because last time we had some technical issues. Now, MACD is a very popular indicator. A lot of traders tend to use it. Let me just go back again on one of the earlier sessions that I had covered on the rule of 3 for time frames. In that, I had very specifically mentioned in the rule of 3 that you must look at your second higher time frame. Again, for those of you who were not present that is also recorded. It's available, and I had prepared a PDF file for it, which I think is very important. In case you do want that PDF, please feel free to send me an email at the end of the session. I'll give you my email. I'll send you that PDF of the rule of 3 of what time frames should one really follow. I mean, what is the larger picture one must look at. In that, I had very specifically mentioned the second higher time frame is to be used to identify a trend. Now, the MACD is a very versatile indicator. If you look at among all the indicators, the MACD becomes quite versatile. For the simple reason, it is an oscillator first. Now, any indicator which is banded between the values of 0 or it has values is known as an oscillator. The MACD, the RSI, the CCI, the stochastics, they are all oscillators. Most oscillators give you oversold overbought levels. The MACD has an advantage that it definitely gives you oversold overbought levels. But besides that, your MACD also gives you the histograms of the MACD are very, very important. Right, so just give me a moment. So if you look at the histograms of the MACD, one of the simplest way of looking at a trend is if your histograms are below the 0 line, it is supposed to be a downtrend. If they are above the 0 line, it's supposed to be an uptrend. Now, there's one very simple way of looking at it. Of course, your MACD also gives you your divergence. As we can see over here, price makes a low, lower low. Your MACD histograms make a higher low, which is a classical bullish divergence. And divergence is a reversal pattern. So your MACD also gives you a divergence advantage of it. Most traders tend to use the MACD as a signal line. Now, for this, you have this red line. As soon as your red line crosses into the positive territory, it's a very strong signal. So your MACD on a longer term time frame definitely is a good indication or good indicator to determine the trend. A lot of traders tend to use it. Now, if I'm looking at the 4 hours right now, and if I'm trading on a smaller term time frame, so if I use the MACD on a 4 hour, I can definitely see the trend. Case an example, right now we can see definitely the MACD is way above, the histograms are way above the 0 line. So it is supposed to be an uptrend. So what I would do on smaller term time frames is I would tend to trade only longs till the time the histogram bars go beneath it. Now, it doesn't mean that I should not trade shorts, but I would be a little more careful. In case here like this, what I would do is I would wait for price to find support somewhere and then maybe start looking for longs again. So that's one of the best ways of using MACD. The other one, most effective way, of course, as I said, was looking at a divergence. The histograms are one characteristic of the MACD which determine the divergence very well. I tend to use the slow stochastic to determine a divergence, as we had seen in the last session, but the MACD is as good as the stochastic. Now, the stochastic, of course, I've got certain characteristics which we had covered last time, so it's a much better indicator, but the MACD by itself is also good. Let me come back to one part of the indicator, any indicator that we're looking at. You must never use an indicator to determine your trading parameters, for the simple reason that the indicators are all lagging. So if you use your indicators to determine your entry, maybe your exits or even stop loss levels, you're headed for trouble. Simple fact, just one moment. We'll just take the question in the session. Yeah. Now, if you look at this, if I'm looking at a crossover of the MACD over here right now, this is where the histogram tends to cross over. And this is where, let's just zoom this inside a little bit, right? This is where I would determine that, okay, we are expected to go long. Your signal line crossover comes even much more later. Now, in the process, what I'm doing is I'm missing out on this part of the move. Now, this is the disadvantage of all your indicators. And so if I'm going to be using my trading parameter, saying that I'm going to be entering long when the histogram goes positive, let's just call it positive, I would be entering over here somewhere, which means that now what I want to do is what we are going to be looking at is one particular method which will give us a comparatively earlier entry into a change of trend. Once again, it's a comparative earlier entry. It's never the confirmed entry because indicators, whatever it is, are still lagging. But this becomes a very, very good method, very effective method. I've been using it when I do use indicators. That is, I've been using it and it's quite effective. Right, so let's have a look. Let's take this particular case in example. Let's go over this unique method of the MACD to get an early entry into the trade. Now, what you must look at, the setup conditions, is you must have histograms forming this peak and the valley. Let me get down to the annotation just one moment. Right. What I'm actually looking for, there we go. I'm looking for this peak and this valley. So I have these two peaks and I have this valley in here. This histogram tends to give you a lot of these. So I'm looking for this particular condition. This is, of course, based on this divergence that we looked at. So it's quite effective. Now, once I come across this peak and the valley, what I look for is the smallest bar in the valley of the histogram. So I would classify this as the smallest bar of the valley of the histogram. So between these two peaks, I would identify the smallest histogram bars. So this becomes the smallest histogram bars. And then what I would do is I would plot a line. Let's do one thing. Let's plot a line over here on the low of the histogram. Right? Let's zoom this a little more inside so we can see it a little more clearly. As you can see, this is the shortest bar of the histogram between the two peaks. And what I'm doing is I'm plotting a line on the bottom of the histogram. Now, what I look for is once price is expected, or after this peak over here, price starts moving up, we expect a change of trend. I look for the first histogram bar which has clearly formed above this particular line. Completely formed above this particular line. Now, if you look at this particular bar, the histogram bar is still within this line or below this line. Now, this particular histogram bar forms completely above this line. So it's only at the close of this particular bar that when I get the close of this histogram bar, now this is a very strong confirmation that we are indeed looking at a change of trend, or we are looking at a shift of momentum. Let me put it this way. We're looking at a shift of momentum. I would always use an indicator along with price action to confirm my entries. I would probably look for levels of support, resistance, or maybe even a break of trend line. But this gives me an advantage. Particular bar. On the completion of this bar, we get an entry, and let's say that we take an entry just based on this particular concept. I would take an entry over here, right? The close of this particular bar, that means the open of this bar. This is where I would take an entry. Now, if you zoom outside and have a look, your entry is over here. And if you look at it, your histogram bars have given you an entry right over here. Let me plot this one this way. Whereas compared to the histogram bars turning positive, we would have taken an entry over here. This is a histogram bar. We would have probably taken an entry somewhere over here. So what it does is I have got an extra, in this case about 85 pips. We are in the 4 hour, of course. I have got an extra 85 pips. I can get into a trade earlier. Now, as traders, our sole objective is to make money, obviously. So if I have a system which gets me ahead of the crowd, which puts me at a distinct advantage that I can enter a trade earlier than the crowd, and when the crowd starts coming in, I can probably exit the trade, which is what professionals actually do. Right, so the histogram bars, if you use this method, gives you an excellent indication of an expected change of trend. Now, once again, this is where we had taken the entry. I would always confirm the entry with a break of a support resistance, maybe a break of trend line. Let's say I would plot my trend lines from here, starting from the highs. This is also one topic that we had covered earlier, how to plot trend lines correctly. This would be the most valid trend lines. Once again, if you're not familiar with it, you can go over the previous sessions. So break of trend line confluences pretty much with the histogram bar entry that we are looking at, and it gives me a strong confirmation. All right, let's have a look at a couple. Let's have a look at real life situations. Now, right over here, let's just zoom this inside and trade the hard right edge of the chart. As I've always said, it's very easy looking behind and saying that, oh, I could have done this when the price is already formed. But it's very difficult, or your true test as a technical analyst or as a trader comes when you don't know what the next bar is going to form. And you are basing your entire trades on the assumption that price is going to go somewhere. We are looking at high probability setups, right? Now, do we have a peak and the valley? Yes, we do. So we have this peak, and we can certainly call this as the peak. Now, what is, let's zoom this a little more inside. What is the smallest bar of the histogram over here? Right? I would identify this as the smallest bar of the histogram. This particular bar. Let's plot a line over here. So we'll plot a line on the smallest bar of the histogram. Now, what I would look for is the next histogram bar. If I have a complete histogram bar, a next histogram bar, which forms completely below this line. It should not be above. Now, the last particular bar, this bar is also above the line. A histogram bar, which will form completely below this. If that forms, then I would start looking for shorts. That would be my indication. Once again, I would rather confirm with a break of a trend line, but this is one place where you can really look at. This works on all time frames. It depends on whatever time frame you're looking at. Let's take it on a smaller term time frame. Right, the same situation, and let's see if we have currently. Do we have any bars over here? We certainly do not have a peak and the valley. Smaller term time frames, since price action, there's a lot of noise. You have a lot of valleys and peaks, which is why trading higher term time frames becomes a distinct advantage. Here, what I would expect, let's put it this way, that one would, if we are looking for a setup, the possibility, or what we would look for, is price forms a valley, and again forms a peak and then starts moving up. And on this peak, we would plot a trend line right over here. Wait for a histogram bar which forms completely above the trend line. That will be an indication to go long. Now let's just take the previous example. I can see some very nice peak over here, right? Okay, can we not see a very nice valley between two peaks over here? Now let's zoom this inside and let's see if it would have worked. Once again, as I said, it's very easy to look behind, but the shortest bar of the histogram between or inside the valley is this one, right? So this is the bar. Sorry, let's take it a little higher, right over here. What is the first bar which forms independently below? So this is your bar which forms below. So this becomes my entry. So we take an entry at the close of this bar. So this is where we take an entry into the trade. And what happens? Does price move on? Yes, it does. So pretty much effective. Right? It's a very good way of using the histograms. You can use it. Once again, try not to use it on smaller term time frames, because let's go down to the 5 minutes over here. You can see that the peaks and the valleys are not really very clear over here because there's a lot of noise. I would prefer it minimum 1 hour and above. Even on 1 hour, sometimes it's really not clear. Higher term time frames. If you're swing trading, this is an excellent indicator, excellent way to use a MACD to get a comparatively earlier entry into a trend. Let's just take some other currency. Let's just take a couple of examples. Right? Let's take the Aussie. It is an hour. That's the whole point, right? That's what I'm here for, to give you a twist to the indicators. If I told you the regular way of the indicators, which you can do a Google search on an indicator, maybe you can buy a book and you can get the same thing, then there's no value to what I'm adding to it. So I'm just wasting my time as well as wasting yours. So we are trying to do something different. I'm not just giving you something because I think it works like this, but I've seen it. I've used it. Like everybody else, like I mentioned, I used indicators a lot. I studied each and every indicator in complete detail, twisted things around here and there, and then realized that you really shouldn't, use indicators too much. And if you do, then take the best possible way, understand the characteristics of an indicator. Let's take a situation of a peak and a valley over here. Do that, Latimer. I have done some back testing. I don't think I have the records right now, but I have some records over. It's very effective. You want to share them with me? As I said, I'll give you my email. Please feel free to share them. I'll put it up over here so that everybody can have a look. Let's have a look at this on the 4 hours on the Aussie. Now, isn't this one nice peak over here? Now, this is an interesting situation. As I said, sometimes it works. Maybe at times it may not even work. Now, in between these two peaks, what is this valley? And this is the smallest bar of the indicator. Let's plot a line on the bar of the indicator right over here. When do we think about shorts? Is when the first bar is formed. Now, this is your first bar, which is formed completely independent of the line that we have plotted right over here. Jupista, I would prefer the 4 hours. Even 1 hour is good enough, but I have seen that the 4 hours on the daily work the best on this particular kind of method. So if I'm trading the Aussie on the 4 hour, it's at this particular place on here that I would say that the momentum has turned bearish. Once again, folks, very straight about this. This is an indication. Now, I would not suggest that as soon as the histogram bars form independent of the line or completely above or below the line, you just jump into a trade. Always use a confirmation. Now, in this case, looking at the Aussie and the 4 hour, we can see by the histogram that price momentum has turned bearish, pretty much bearish. Right? Now, once price momentum has turned bearish, and right now the histogram bars have gone negative, but this is a place where we would have seen, I would have probably looked for a break of a trend line as a confirmation, which price is broken, which is good. And there's another thing which I always talk about is trend lines. We've got some nice break. So certainly on the 4 hour, the Aussie is in a bearish mode right now. Should we enter the trade? Depends on how you want to do it. You can wait for price to move up and find resistance somewhere, then take a shot. But your histograms right now are giving you the momentum has turned bearish. Now, that's one excellent way of using it. Let's have a look at this previous change to a bullish momentum. Right? This particular, this is an excellent peak and valley. When I have two peaks like this, this also is a nice divergence. It works best on a divergence. I can see price making lower lows. Your histogram is making higher lows, which is a classical divergence. You can base your entries of your divergence on this one. So let's just zoom this inside. What is the shortest histogram bar? This is the shortest histogram bar. Let's plot a line on this one. Right over here. Let's take it a little down. There we go. And what is your confirmation? Your confirmation comes on this particular bar, which is the first independent histogram bars to form completely above the line. So this is my bar. Give me a moment. Right over here. So if we take it to the entry, this becomes your entry into the trade at the close of this bar. So this is your entry into the trade. Now, if you zoom it over here, if you would have taken an entry over here, obviously keeping a stop below the lowest low, logical place to keep a stop. Look at this nice ride. What you would have got earlier is your histogram bars turning positive here. So you would have at least got this much of a price movement extra. And as a trader, believe me, these are the edges that I look for. Something that gets me into a trade earlier than the crowd with a confirmation, not because I think that it's doing well, but technically feasible solution, technically feasible situation. All right. So that's was it about, folks. Pretty interesting way of using the MACD. As I said, please try and use it on higher term time frames. Smaller term time frames, there's too much noise on price. The peaks and the valleys form quite a bit. They're not really very clear. 1 hour and above is ideal. 4 hour is the best I've seen from my experience. The best way to use the MACD and get an early entry. You're swing trading. The price movements can be pretty strong on a 4 hour. You can really catch a good trend. Case in example here, if you would have got the Aussie, you would have ridden the trend right to the top, which is a huge move. All right. So, as I mentioned, Mr. 5 minutes, not really suitable for it because too much of noise on it, too much peaks and valleys, it gives you kind of a false thing. All right, folks. So I think we can stop the recording here for some time. Should not be an issue. If you have any questions, please feel free. I'm here for some time. We can answer some questions. As I said, you want to share the details of the back test with me, please feel free. If you have any questions, this is my email. Get back to me. I'm always here to answer it. If you need any more information, sorry about that. My email. Well, I'm typing it out. Just give me one moment. There you go. It is Vista. It is usually for longer. I trade on the longer term time frames. That is the reason why I have designed or I use these methods on longer term time frames. Well, there you go. That's my email address. Anytime you have any questions, feel free to get back to me. For those of you folks who are in UK, first week of November, I will be at the World Money Show. In fact, I have a very special event there. It's a paid event, very frankly, but I will be disclosing one of the most effective trading techniques there. I'll also be having a workshop. If you're interested, feel free. You can come and meet me at the World Money Show. I'm going to be there for 3 days continuously. We can talk about a lot of things. I always like meeting people. It will be good to talk about trades. All right, any questions? No? Nothing so far? All right, folks. Well, good to be over here. I do hope this helps you in some way. Bottom line, once again, remember all indicators are lagging. Use them, understand their characteristics, use them in the best possible way. Do not use them like everybody else or you're going to be losing money like everybody else. All right? You're welcome. Welcome, Vista. I'll see you around, folks. Have a good trading week. Have a good weekend. I'll see you probably next week or maybe week after that. We'll come back with one more series of the indicators, one of the last ones. Thank you, everybody. Thank you for being here. Really appreciate it.